Okay, so now let's discuss about what is share buybacks. So now this same example which I took 5 shareholders and we made 50 lakh rupees of profit. Let's assume that instead of 50 lakh rupees we made a profit of 1 crore rupees. Okay. Now what we think, so 1 crore means let's say that, so if we withdraw 1 crore rupees, we 5 people will get 20 lakh rupees each. But we are thinking that what if instead of 5 we were 4 people? So we would get 25 lakh rupees each, right? So profit would be divided among less number of people. So each of us would get would get more profit, right? So now what we are saying is, we are 5 people. To this one person we are saying that why don't you sell your stake? The market price of our share is 100 rupees right now, but we are ready to buy those shares from you as at 105 rupees per share. So you sell your stake. So instead of 100, you're making the at 105. So that's your profit. And now from next time onwards, whenever we divide the profit, then instead of 5 people, now the profit will be divided amongst 4 people, right? So this kind of thing is known as a share buyback. So the company is buying back its shares which it had issued, right? So when the company needed money, what it had done, that we want money, you give us money and we'll give you some percentage stake in the company, right? Now after some years, or let's say some years, so now we are making profit, and now we are saying that now you sell your stake, we are giving you money, we are giving you at a premium. So the market price is 100 right now, but we are ready to buy it from you at a premium of 5 rupees. So we are ready to buy it from you at 105 rupees, right? So you sell your stake, you are happy now, and we are also happy because from next time onwards the profit will be divided amongst only 4 people, right? So this kind of a thing is known as share buyback. So now even so, when the company came up with its IPO, it took the funding from it, not funding I should say, okay, it took money from the public, right? So I've explained to you about primary market, secondary market, right? So people gave money to the company, and they in turn they got some percentage ownership in the company in the form of shares, right? So now the company is telling that the market price is this much, we are ready to buy it at a premium, you give us the shares back and we are ready to buy back the shares, right? So now again in this we have X date, record date, and all of these things. So in this, now for X date and record date, you already understood that you need to buy the shares. So why would you be excited to buy the shares now? That because the company has told that I am going to buy the shares at 105 rupees. Let's say the price is right now 99. So what is your thinking? I am buying it right now at 99. The company will buy from me at 105. That's how I'll make my profit, right? But again, here the concept of X date comes, like there was X dividend date. So whatever is the X date, one day before that is the last date till which you can buy the shares if you want to be eligible for the buyback, right? Because T+2, like I've explained to you. So, but now in this, there are 2 options. One is an open market offer and one is a tender offer. Okay, so open market offer is like company will tell that we are going to buy the shares from this period to this period from the open market, that is from the NSE and BSE, like we people buy it from the normal market, right? I mean, there are some, okay, let's call it normal market, okay, and another is tender offer, right? So let's say that you are holding the shares of TCS. It's not compulsory that you want to sell those shares to the company, right? So company is telling you that like same example, the price is 100 right now. We are ready to buy these shares from you at 105 rupees if you sell it to us right now. You may not sell it if you want to. It's your choice, right? So you can either ignore the offer or you can subscribe for the buyback offer, right? Now, why would you want to ignore the offer? Because the company is telling that I'm ready to buy at 105, but you think that you have invested in this particular share for the long term and you do not want to sell your shares right now, right? So you might want to ignore the buyback, right? And you might not want to sell your shares right now, right? So this thing might happen in buyback, and again, buyback is a positive sign for the price of the stock, because if the company will have excess cash, first of all, it needs excess cash so that it can purchase back its stake in it can increase its stake in the company, right? And the second thing is, see, whenever you are, so now let's say that I am the owner of the company and I have 20% stake right now. Why would I be excited to make this 20% stake to 25% stake? I would be only excited for this if I think that in the coming years the company is going to perform very well. But I have right now only 20% stake. I want to increase my stake because I think the company is going to perform great in the next couple of years, right? So this is a very positive sign for the share of the company, right? Because the company believes in itself that we are going to perform. So we want more ownership in the company, we want more equity in the company, so we want to buy back the shares from the company, from the public, buy back the share from the public, right? So this is a positive, sign for the company. And again, the company will announce the buyback. Then there will be a next date, there will be a record date. Till record date, you need to have the shares in your demat account if you want to be eligible for the buyback. And again, like I told you, one day before the ex date, you need to buy the shares. That is the maximum. That is the latest till which you can buy the shares if you want to be eligible for the buyback, right? So yeah, that was all that I wanted to talk about this particular corporate action, that was buyback. So till now we have talked about dividends, we have talked about buybacks. In the next part of this video, I am going to talk about what is known as rights issue. That is somewhat similar to buybacks, but there are a couple of differences obviously. So that's it for dividend buybacks. We'll come up in the next video with rights issue. And this was actually what I wanted to show you. So this is the share of TCS, Tata Consultancy Services. And over here you can see this buyback. Over here also you can see buyback, right? So this is again a corporate action. So yeah, this thing that I just forgot to show you the practical example. This is the example of TCS, right? So yeah, that was it that I wanted to show you. Now let's go to the next video that will be about rights issue.